Hometown Solutions. I'm your host, Jean Newell, and with me in the studios today is my co-host, Jonathan Lack. Hello, Jonathan, and welcome back to the studios.
Hello, Jean. It's a pleasure to be with you.
Oh, my gosh. We've had some exciting weeks in the last few weeks of our shows. Actually, was a couple weeks ago we had FEMA on, I believe, and we were going to talk a little bit about some of the disaster things that they talked about and how it relates to some of the programs that you have coming up.
Yeah, that would be great. Yeah, for those of you who may not have been listening, a couple of weeks ago we had a representative from FEMA talking about a variety of the services FEMA provides, including some disaster assistance. And along with that gentleman was a young lady, Doris Evans, with the USSBA, Small Business Administration.
Yeah, that was Jonathan Mills with FEMA.
Thank you. And that was with the Office of Disaster Assistance, the SBA, and learned a lot, including that there's disaster assistance available, loans and grants available. But one of the important things is that you need, if you were affected by Hurricane Matthew or Hurricane Hermione, you do need to register for assistance, and here it is mid-December now, and the registration is imminent. You have until December 16 to register with FEMA in order to potentially obtain any disaster assistance. So it's very important to register. If you're listening to this live, you need to do that rather quickly, and you can go to FEMA.gov, I believe it is.
Ready.gov.
Ready.gov is where you can get a lot of information, but I believe it's FEMA.gov for the registration.
Okay.
So one of the things that I learned a lot on that show, and again, we keep these shows archived, so if you're at talknetworkradio.com, you can go to our archives, and Gene, you can probably...
Yeah, the host, just go up to the host page, and you'll find our show, Your Hometown Solutions, and it's by date, and you can pull up that FEMA show, which was just 2 weeks ago. And it went fast. That half an hour went fast because we were talking about the differences between grants and loans. And a lot of people are still confused, as we were really before we went on air, of what FEMA provides and what their whole goal is. It's not to be your all-encompassing insurance when you have no insurance. It's there strictly for emergencies.
Yes, it was a very informative show. And one of the things that arises out of that is learning of different government programs and private programs and different opportunities that are out there. We focus our show on real estate. And so towards that end, I will put out there one of the programs that we like to emphasize, the Florida Hardest Hit Fund program. And that is a federally funded state program. So it is run by the state of Florida, and you can get more information on that by going to our website, or my website, at lacklaw.com. That's LACKLAW.com. And we have a link to the Florida Hardest Hit program. And the Florida Hardest Hit program provides mortgage payment assistance if you have become unemployed or underemployed through no fault of your own. And one of those no fault of your own could be the hurricanes or any type of natural disaster. If your business has been stalled due to a disaster, then there may be mortgage payment assistance on your home during the period during which you may have unemployment or underemployment as a result. So it's a wonderful program designed to assist with mortgage payment assistance. And we've talked about it before on the show, so we can do a little bit more on that now.
Well, we're really pushing for that because we don't know when that's going to end. That Florida's Hardest Hit could end at any time. So we want to make sure that people do take advantage of that if they're in that situation.
Right. The program actually has been extended. The question, as with all federal programs, is what the funding is going to be. And, of course, President-elect Trump is still not President Trump yet, so we don't know exactly how things will play out over the next few years. But I believe the Florida Hardest Hit Fund does have secured funding for at least another year or two. Again, I'm not certain of that, and things can change. But the The program, I'll get into a little more detail on the program. The idea behind it is if you are unemployed or underemployed through no fault of your own, so you've either lost your job because of the economy, you were laid off, again, it was not for cause, but because of the economy, or maybe you've had to take a pay cut, either changing jobs or taking a pay cut, and your income is at least 10% less than it had been. If that causes you to have difficulty making your mortgage payment, then the state of Florida will assist you with that mortgage payment for up to 12 months or $24,000, whichever comes first, of assistance. So the idea is to enable you to make your mortgage payments while you're out there looking for a job. So instead of stressing over losing your home, you can concentrate on getting reemployed or increasing your income such that you can afford to pay your home without the assistance. And it has saved a lot of people and helped a lot of people. The program's been around since 2011, and unfortunately it hasn't been advertised enough, so not enough people are aware of it. And
you're one of the, I don't want to say counselors, but what do they call that?
They call it an advisor. We're an advisor to the program.
In Brevard as well as Broward?
Yeah, the way the program is structured is the state has appointed advisors throughout the state, and they do it by territory of county. And different advisors handle different counties, and there can be multiple advisors in one county, and one advisor can handle multiple counties. My office handles Broward County, Palm Beach County, and Brevard County. Those are our principal offices or areas we service. There are some advisors that handle the entire state and some that would handle just one county. In order to work with an advisor, you go on to the website. Again, you can get there through laclaw.com, and there's a link on there. And if you do apply, you would use our referral code of 69032, and that's how you'd be assigned to our office. However, if you did not put a referral code in, you would still get assigned to an advisor who would assist you with the program.
And the advisors, there's no cost to anyone to find. The advisors are just basically there to help you get through the paperwork, be an office maybe where they can stop in and get more information from someone who's helping you process the paperwork.
The intention of the program, again, this is a federally funded state program, and it is no cost to apply. So when you log on and you enter the information and you determine whether you qualify or not, there is no cost to you. If you do not qualify, that would be unfortunate, and we would let you know that, but there would be no cost. If you do qualify, there is no cost either. Now, the way the program is operated is the government will pay your mortgage for you, as I say, up to 12 months or $24,000. They do record a lien against the property. However, there's no monthly payments. You do not have to pay it back unless you sell your home for a profit. And it is what we call self-liquidating. So every year, the amount you would have to pay back if you sold the home goes down 20%. So after 5.5 years, there is no debt against the property, and you could sell your home and have no payback. And
it was really created for people who want to stay in their homes, not to have a convenience for people that are flipping homes or something like that. So it makes sense that if you're trying to save your home, you probably want to stay in it for at least 4 or 5 years anyway. So I always tell people it's kind of a temporary loan that turns into a gift.
That's exactly right. Yeah, there again, it does. The debt goes away if you stay in your home. And however, if you do go to sell the home, you're not locked into it. You would have to pay back. It is a zero interest loan. So even, let's say you got 3 months of assistance at $1,500 a month, so $4,500, and it got you back on your feet. You got a job, you're working, and 2 years later you decide to sell your home. Well, you'd have to pay, in 2 years, you'd have to pay 80% of the amount, or 60%, depending on the date, of that amount back. But it's, again, zero interest, and it'd be out of the sale of the home. Now, for those in the unfortunate situation where they owe more than their home is worth, then you would not have to pay anything back. You never have to reach into your pocket to pay back the money you've received. It would only come out of any equity if you were to sell your home. And again, if you stay in the home for 5.5 years, there's no owed. So it is, as you say, turns into a gift at that point.
So if, just to kind of recap this, if you need assistance and maybe you're behind on your payments by up to a year, really, if you haven't been able to make your mortgage payments for a year, you can go in and qualify.
Let me clarify
or
that.
Less.
There are two portions to the program. There's what's called the mortgage loan reinstatement portion. So what happens is, unfortunately, people who lose their job that can't make their mortgage payment and they fall into a hole. Let's say your mortgage payment's $1,000 a month and you're unemployed for 3 or 4 months before you hear about this program. So you're now $4,000 in the hole, and now you hear about the program, and the program, you may qualify and it'll make your mortgage payments for you moving forward. There is also a reinstatement portion which will pay the arrearages up to, there's 2 portions to it, up to $18,000 if you also need mortgage payment assistance. So you're unemployed, you're still unemployed, you're $4,000 in the hole, and you still need the extra the extra year of payments, or up to a year, then they'll pay up to $18,000. Now, if you've actually fallen into a hole and now you're reemployed 4 months later, you're $4,000 in the hole, you now have a new job and you can afford to make your mortgage payment, but you don't have the $4,000 to make up the difference. The mortgage loan reinstatement portion of the program will actually pay up to $25,000 in order to reinstate you. So depending on whether you need monthly mortgage assistance or not, there's up to $18,000 or $25,000 of reinstatement. And again, same terms. It's 0 interest. It diminishes at 20% a year over a 5-year period. So ultimately, you would not have to pay back this money if you stay in your home, or again, you'd only pay what you owed at a diminishing amount if you sold the home.
So there's 2 parts to this. One is if you're behind on your payments and you're unemployed or underemployed, and you only have to be underemployed by 10%. So you could technically have been making $60,000 a year, and 10% of that would be $54,000. You could.
That's correct.
Still qualify.
Now, there are other eligibility criteria, so it does depend upon the amount you owe, the amount your monthly mortgage payment is. So there are criteria for qualifying, but we find that a fairly large percent of people who are unemployed through no fault of their own, we find a large percentage of those people will qualify for this federal
So
funding.
There's, in total, if you were able to take advantage of both programs, and let's say you owed up to, what did you say, $18,000 in the arrears of payments, and you're still unemployed or underemployed, you could actually have your mortgage payment paid up to a year in the future, if the max.
That's correct.
So there's paying in the arrears, paying in the future, and so it's something that people just don't believe it's even available. When we tell them about this program, they go, that's too good to be true. There's nobody that's going to give me money to help me out of this hole, but there is. And as you said, the other alternative is if you're a person who has been, maybe you bought your home at the height of the real estate at maybe 2005 or something, and you haven't made up the difference yet. You're still up to, what is it, $50,000? Yeah. Your mortgage is actually $50,000 more than the value. Thank you, of the value of the property. So you can actually get an assistance with that too. Let's talk a little bit about that principal reduction
program. Now, this is under the same umbrella of the Florida Hardest Hit program, and it's run by the same company, the Florida Housing Finance Corporation, which is the state of Florida financing agency. And the principal reduction program is for a different group of people. That's for the people who owe more than their property is worth. Now, the criteria on that, again, there's a variety of eligibility criteria, but the main one is that you owe more than 115% of the value of your property. So easy math, your property is worth $100,000. If you owe 115 or more, then you again may qualify under this program. And the purpose of the program is to reduce your debt down to 100%. But with a maximum assistance of $50,000. So giving hard numbers, your house is worth $100,000. If you owe $125,000, then if you qualify, they will lend you $25,000. Again, I say loan, same terms as before. It's 0% interest. You do not have to pay it back unless you sell your home within this 5.5-year period, in which case you'd pay it on this reducing 20% a year basis. So if you owe $175,000 on a $100,000 house, then the most they're going to give you is $50,000. So you'll still owe $125,000. You'll still be upside down, but you're a lot closer to. And again, this $50,000 can be used to then maybe re-amortize your loans so that your monthly mortgage payment is less. And again, there's other obvious benefits. But if we can get your home down to 100% of the value, so we get it down to your debt being